Hi, welcome back to our next edition of Facebook Live. And we thought today we would talk about something that we're starting to get a lot of questions about from our clients and just in conversation with people, and that is inflation.
Yes.
Yeah, it has reared its ugly head a bit, hasn't it?
Yeah, it's been very I mean, for my whole career, that's never been a big topic. Um,
Yeah, the last time we saw serious inflation, and we are not in that state at the moment, was in the late 1980s when we
mhm.
had what was called stagflation, which was an economy that wasn't growing, but we had high inflation rates. And it was pretty painful for a lot of people, especially those that were retired and had more of a quote fixed income. And their income wasn't keeping up with the cost of living. And so it created quite a pinch back then. So I won't put that in context to your lifetime, but I'm pretty sure you don't remember that. So yes, we've had decades of low inflation,
Yeah,
really low, like less than 3% most of the time for the last, 20 plus years.
yeah,
I didn't go back and reconstruct, but it's been below 2% for quite a while.
yeah.
Yeah.
And technically, it's still, as far as the global inflation rate, it's still on the low side.
Yes, definitely.
But we're starting to see very individual things that are creeping
Yes.
up, and
Yeah.
we can maybe say that it started with the run on toilet paper, which is very COVID related. But there's been a couple of things that have been a causal kind of reaction.
Yeah. Yeah.
The biggest one that I've dealt with personally is lumber. I had some projects that I mean, like the rest of the world, had some home projects in COVID that we were like, hey, now's a great time to get this
I'm
done.
home more, so
Yeah.
yeah, exactly.
Yeah, and it just blew up the
Yeah.
lumber prices.
Created quite a bit of demand,
Yeah.
and the supply side has not been good as well. So, and I think we're starting to see that. Here's an anecdotal story about chicken. We always go to this Mexican restaurant called Chewy's on Saturdays, and my daughter always gets the 3 taco platter with chicken. And last Saturday that she got 2 tacos, and she's like, "Where's my third taco?" And like, well, we've changed it to 2 tacos, and they didn't really say it was because of chicken prices, but I can't imagine why else. But because they said if you got beef, you still got 3. So interesting, huh?
That is interesting.
So yeah, we starting to see some real life examples of that. Of course, and as we've talked about before, the run up in housing prices has
Yep.
just been insane, and also the car supply has been interesting. So some of it is this inflation, is some of it is greater demand.
Yep.
As you were talking about, we're more
On the
focused on
lumber.
our homes a little bit
Yep.
more, and some of it also is supply.
Yeah.
Yeah, so there's been a supply of a lot of money that into the economy. The stimulus packages has injected some money into the economy, and for some people, it's been a lifesaver, and for other people, they didn't really need the money, but they received it, so they're either spending it or saving it. So it's like a bonus for them.
Yeah. Yeah, and that's not that we ever get into the game of kind of predicting where markets are going to be or go, but signs right now we have clients that will ask about the economy, just as far as equities and the signs point to not huge dips. We see corrections all the time, but because the demand is so high, we don't expect people to stop spending because there's money there.
There is.
But on the flip side, and exactly what we're talking about today, from an inflation perspective, because there is so much pent up demand and people are still spending money, we still have money flowing in the economy.
We do. Yeah. Yep. If you kept your job during this very long year and a half, you probably had less things to spend money on, and so people have accumulated money, and they're ready to travel.
Yeah,
They're ready
I've
to.
seen many posts on Facebook and on people taking their vacations, just one
Is that
after
right?
another.
Yeah, I heard. Yeah, planes are full, all that good
Yep.
stuff, and so. People are choosing to spend the money, so that would translate into a stock market that isn't super vulnerable because the companies they're selling things, which is it's all about profits And so that supports the profits. So there are dark spots for sure in the economy, and that isn't to say we can't have a correction. It's normal to have a correction every year, usually about 10%. So, but we don't see a reason for a crash at the moment anyway.
Yeah.
But I'll be the first to say I cannot predict the future.
Disclaimer. Yes, we'll throw that out there every now and then.
Yeah. So we've had other supply issues like the Colonial Pipeline.
Yep. I'd say for most of our listeners, we felt that firsthand.
Oh yeah, I remember getting up early one morning trying to find a gas station. I got to the fourth one, and finally they only had Supreme. But yeah, it was a little unnerving.
Yeah.
Given like my daughter getting her to school, and we could work from home, but she can't go to school from home. Maybe if it was an emergency, she could have. But anyway. So cyber attacks, that's also impacted the world's largest meat production facility in Brazil. So beef prices might end up going up with chicken prices as well. So we have all these like weird push-pull events, and it's...
What was the weird canal thing too? We didn't talk about that. The boat that got stuck. Oh,
when the Panama Canal, that backed up supply because the boat was stuck, or ship was stuck and couldn't get through. So that's how crucial supply lines are. It's fascinating, but that was that slowed down quite a bit of. I'd forgotten about that one.
Yeah, me too.
Yeah, so inflation is becoming more present than it has been in recent history. But do we need to panic about that? We'll talk about that a bit more in a second, because first Mike wants to figure out how well I know my inflation.
Yeah, this is for everybody, so you guys get to go through this quiz. Except I don't get to actually hear your responses, so I'm going to make Jennifer respond.
So you'll see how bad I am at this.
So we did, and this is kind of to paint a little more perspective. The inflation has always been around.
Yes,
and it has also like we say that we have projections on how we inflate a financial plan. As far as the projections there, and I don't. The average inflation, like overall, has been a little over 3% over a certain time period. However, if you look at individual items, that can vary quite a bit depending on what you're talking about.
Right.
So we're going to go through a couple of individual items, and let me make sure I look at the right one here.
And while you're doing that, I'll add to your point. Inflation is it's sort of like how they talk about heart disease as a silent killer, or I guess it's high blood pressure. It's sort of that silent killer on your financial future, because it's usually so small and incremental, the growth of the cost of things, that we don't notice it right away. But over time, it erodes your buying power. It erodes what $1 will buy. Now $20 will buy. But and so it is something that should always be considered in a financial plan. And so when people want to run to, I just want my money in a bank account because I do not want to experience the volatility of the stock market, you are losing money right off the bat, because your buying power doesn't keep up with inflation, even in a low inflationary environment. So.
Yeah. You're not going to always be able to pay your bills the same as you are today, because they're going to cost more. And if your money's not growing with the growth of the cost, you're losing out there. You're buying less.
Yep. All right.
Okay, so we've got 10 items here.
I've not seen these.
I don't know that we'll go through all 10. But,
okay.
But I'll start jumping through them. So I'm going to list off the item, the cost that it is today, the average cost that this program is telling me that this item is today.
Okay.
And then you've got 3 options on what you think the cost was in 1980.
Okay.
So we're going back 41 years. Oh, gosh. Okay. And my logic there is our average client, this is just for y'all's information, which I think
would
is pretty
like to
cool.
say I don't remember 1980,
Yep.
but I
can't. Our average client's age is 59. So, 1980, our average client was 18 years old.
All
so
right.
that's my logic between why we went to 1980. So if
All
you're
right.
59 years old in 1980, you were 18. So play along and see if you can guess what these expenses were.
Okay.
A gallon of gas today on average is $2.74.
Okay.
In 1980, was it 49 cents, $1.25, or $2.04?
$1.25.
Correct. That's one. I should
That's
be
one.
marking it. I don't have a pen. We'll try to keep track. A loaf of bread was
Okay.
$1.29.
Okay.
In 1980, was it 51 cents, 23 cents, or 86 cents?
86.
No, that one was 51 cents. Loaf of bread was 51 cents
Wow.
in 1980. A dozen eggs
Okay.
today is $1.74.
Okay.
Okay, according to this.
So,
Yeah, it depends on where you shop, I guess. Yeah. In 1980, was it 26 cents for a dozen eggs, 84 cents, or $1.34?
80, would you say 84 or 86?
84.
84.
84 cents. That's correct.
Wow.
We're 2 for 3. A Ford Mustang today, this is the base model, it was $25,680.
Oh, really?
Okay.
Okay.
In 1980, was it $2,242,
Unlikely.
$5,338, or $8,808?
I'm going to $8,808.
Nope, $5,000.
$5,000 for a car?
You could buy a Ford Mustang in 1980
Wow.
for $5,338.
Okay.
It wasn't my favorite year of the Mustang, the 1980.
No, I was going to say you wouldn't have bought it anyway.
No, I wouldn't have bought that one. I'm going to do 2 more. I'm not going to do all of these,
All right.
but these 2 are fun ones that I like. This one because I know of the Lozado family infatuation with Disney. Disney World tickets.
Yeah,
Yes.
okay.
Today, one day in the park at Disney World is $109. Okay. In 1980, what did it cost you to go to Disney World? Was it $3.30, $7.50, or $11.48? Those are your options.
I can't believe it was ever that
Isn't that
cheap.
wild?
I'm going to go with the $7.07.
$7.50.
Wow.
Yep.
Okay. Wow.
Yeah, $109 to get in the park today. I'm curious how much the park has changed since 1980, but it was a big park then.
Disney World probably did it have Animal Kingdom? I don't know.
Yeah,
I don't know.
Yeah. Okay, the other one that I want to do is Super Bowl tickets. This one's fun because this has got a crazy number to it.
Okay.
Today, $3,700 on average
To buy one ticket?
to buy one ticket to get into the Super Bowl. $3,700.
Wow. So you know everyone who goes to the Super Bowl is either really wealthy or has someone who loves them deeply enough to give
got
them
the
a
right
ticket.
connection or something. I don't know.
Wow. Okay. Okay.
Okay, in 1980, remember, was it $12.90, $30, $49.50?
$49.50.
It was $30
$30
to go to the
to
Super
go to
Bowl
Super
in
Bowl.
1980.
I need to hand calculate that inflation rate because that is definitely faster than the rate of inflation.
Got it for you.
Oh,
I've got,
do you?
yeah,
Okay.
I've got those numbers. Okay. Oh, I'm going to do college too. We'll do this last one.
Great. Okay.
1 year at a 4-year public college today is $10,230.
Really?
1 year at a 4-year public college. I don't know if that's state specific or if that's across the whole country.
That must, because in Virginia, that's more like 25,000. Yeah.
Well,
Interesting.
Off
okay.
of this sheet.
What do they know? No.
Yeah. What do they know? Yeah. In 1980, $336, $800,
No.
$1,248,
$1,248.
$800. It was
Really?
$800. It says, yeah. Yeah.
Huh.
So and I'll just read this one. I'll make you guess this one. But they also have 1 year at a 4-year private college. It says is on average $35,830 today.
Okay.
Was $3,600 in 1980. That is crazy.
That is insane.
That is crazy.
That is faster than the rate of inflation. It's got to be.
Oh yes, yeah.
College has just been.
Yep.
We'll see what happens now.
Yep. So the other ones on here, a movie ticket is $9.14 on average today. It was $2.69 in 1980, and a new home, the median sales price on a new home today is $321,000. In 1980, it would have been $64,000. So we're going to do this again, and we'll just read those same rates that we just used. I'm going to project those going forward.
Oh, okay.
So
Great.
this is now just kind of the eye-opening piece, because we sit down with clients often and we go through a financial plan, especially if we've got a long plan ahead of us. We're looking way into the future, and we see some of the numbers because we have calculated inflation. They look astronomical.
They do.
Whether it's an expense or sometimes we'll show a client, we're projecting you're going to have $5 million at the end of your plan, and And in their mind, they're $5 million.
I want to spend that.
Yeah. When in reality, $5 million today is very different. Healthcare.
Yes.
Healthcare is a great one. That when we put a 40-year-old in the financial planning tool and we project healthcare, once they hit retirement, that expense is 6 digits. I mean, it's hundreds of thousands of dollars a year. Which is ludicrous. I mean, that's so much to be spending in healthcare expenses. But in reality, 1980, if you had asked somebody, could you picture paying $109 to get in Disney World in 2020, 40 years from now? And they would have that same reaction, like, no way, I would never, because it was just so. And today, that's not wild, like that's not a crazy number.
No, not at all. Yeah, it's expensive, but
It's
doable.
Yeah, but it's doable. I mean, people still go, and they're that's the supply and demand. People are paying those prices. So looking at the same 41 years into the future. Okay. Or I did it right at 40. I could only do it by tens. So 40 years into the future, a gallon of gas is going to cost $9.17 if we stay at the same rate.
Okay.
Loaf of bread will be $3.65. A dozen eggs, $5.31. A Ford Mustang will be $91,000.
Wow.
This is the basement. There are some Ford Mustangs that you can pay that much for now.
Really?
Today.
Oh,
yes.
Okay.
But you're getting all of the bells and whistles. Disney World tickets is going to cost you $2,172 to go to Disney World in 40 years. Yeah. It'll cost you $35 to see a movie, to buy a movie ticket. This one is my favorite. This is one of those numbers that it probably cannot maintain this, but if we project the Super Bowl inflation, the cost to go to the Super Bowl, what it has been for the last 40 years, forward 40 years, it's going to cost you $1,489,000 to buy one ticket to go to the Super Bowl.
Yeah, I'm thinking the demand might drop off a bit.
Yes.
Yeah. That's crazy talk.
Yeah. So the last two, public college, $162,000 for 1 year. Private college, $430,000 for 1 year. Oh, and the median home sales price, $1.8 million.
Wow.
To think that the median home price and
So what do we do about this?
How do you plan against that, or can you plan against that? What do you?
Actually.
What do you do?
And it's not always a smooth ride, right? And we do know from research that inflation tends to have long-term trends.
Yes.
It seems to be somewhat predictable. So if you have an upward trajectory, it tends to stay that way for a while. And same if it starts to decline, it also tends to stay that way for a while. And this goes back to that comment about having your savings account and having your money safe. Mm-hmm. Well, the higher your inflation rate gets, the more you're really losing your buying power. There's really only one way to, there's probably more than one way. There's one normal, predictable way to make your money grow faster than the rate of inflation. And it is a bumpy ride, but that is to own stocks or equities, as people refer to them differently. But because you will get a return over time that's faster than the rate of inflation. Do you get that every year? No. We all know you have negative years at times. Yeah. Then you have some powerfully great years as well, which we've just experienced. A year of 2020, things weren't so great, but you look at returns a year later and they were phenomenal.
Yeah.
And so it's not a smooth ride. And so, but what people are, the way we're wired psychology-wise is we think that safetiness of no volatility is good and safe, but you're actually much safer if you can withstand the movements of the market over time and grow it faster. Sort of the flip side of this is the bond portion of a portfolio, which most people should have some portion of bonds in their portfolio. And bonds actually have negative returns when rates go up. And so there's some careful positioning there of there are many different kinds of bonds issued by different companies, different by different countries, different maturities. And so it's positioning yourself in that right place. You really don't want to own a bond that matures in 30 years that was issued today 2%. And because rates are likely going to go up, and that value of that bond's going to get lower and lower over time. And so it's buying shorter term maturities. So that's more of a protective move, though, than growing it. But you really have to be invested in the stock market. And when I was saying the only way, I kept thinking about people like, well, what about gold? Or what about and I can touch on that a little bit. Gold can be an inflation hedge, but it's less, the returns are less smooth and predictable. So we had a very long, going back to that 1970s or early 80s of high inflation, people were buying gold. And I actually know someone who bought gold at the height of that price range back then, but it took them until 2008 before they actually made money over the rate of inflation. Yes. And so that's a very long time frame.
And I mean, if you think about it, when you're buying gold, if we can call that a commodity, you're buying an item, you're betting on the inflation on one single item. You're saying that this gold is going to be worth more in the future just because of what it is, what that one item is. And I mean, we can see from that exercise that some things have inflated way faster than some other things. So that's not a sure bet. You're being very specific. If that's your only goal, if that's your only goal, that's just I'm playing acrobats in my mind there. If that's your only goal is to hedge against inflation, gold is such a specific purchase there. Whereas when you're buying equities, if you think about that logically, you're investing in companies that will be infected by inflation, in the sense that the at Chewy's, they were selling their they could have raised the price of that meal. What they did was they decreased the more, going down to 2 tacos instead of the 3. So Chewy's can still make money. If you're an investor in Chewy's, you're also making money. They're kind of keeping. That's why equities keep up with inflation. Because they're directly tied to it. That's how the market works.
Yeah, for sure. So, we'll all make adjustments in how we behave a little bit. I'll probably buy less chicken, even though that's my favorite protein. But and we'll all make some of those adjustments. But we also just need to know that investing in a well-diversified portfolio that includes equities, and a hefty chunk of equities for most people, is the way that you'll get through this until things reverse themselves again. But I do want to reiterate, we're not in a panic environment, and we're not even close to one. As far as people with wheelbarrows of money going to the store to buy a loaf of bread, which we have seen in developing countries when they had just runaway rampant inflation. Or even to what it was like in the late 1970s, early 80s, when we had double-digit inflation at that time. So we're not there, but we do all need to be cognizant. Hopefully the supply issues will catch up a bit to demand, which will help. And hopefully cyber attacks, which have really seemed to be more frequent, or maybe we're just hearing about them more. They've recovered some of the money from one of the cyber attacks. It was paid in cryptocurrency, and they were able to go in and grab it. I saw that in the Wall Street Journal yesterday.
Interesting.
So the law enforcement's definitely on it, and so that's a great thing. But it really comes back to a well thought out financial plan and a well thought out portfolio, and just kind of keeping an eye on your day-to-day expenses, and you'll be fine.
Yep.
So we hope you enjoyed this episode of Quiz Jennifer. Was not my idea. So, so please let us know if you have questions and any ideas for future topics. You can reach us at info@summitrva.com, and our website is summitfinancialpartnersrva.com. Thanks.
Thanks.
Bye.